Good morning, everybody. It's Christian from Serene Education with the Forex Majors Analysis up for the 15th of February 2013. Hi, guys. Hope you're all doing well. Hope you had a fantastic Valentine's Day yesterday. And I hope you're looking forward to a great weekend with family and friends. But before we get there, we have to go through the four majors. Okay, we've got some news out today. We've got G20 summer meetings today all day. So that's happening in Moscow. And I think what everybody's going to be talking about, in my personal opinion, is what's been happening recently on the yen. Speculation around the yen. So they're going to see, we'll talk more about that. We had a bit of an incident midweek relating to that where prices dropped significantly. And I think it's going to be on everybody's mind. So please look into that. And what else do we have today? So news-wise, a lot more for the US session this afternoon. Empire State Manufacturing Index. What else we got? Industrial production month-to-month figures. And we have the prelim consumer sentiment figure later this afternoon at just before 3 p.m. GMT. So there's some news out today. Please be aware of it. End of week, a lot of negativity. You probably find that price, if anything, if you don't get any more significant moves, might taper off as traders consolidate their profits. So we might see a bit of a pullback either way, depending which way prices have been moving in relative to where we are today. So keep that all in mind. Otherwise, let's have a look and see what's been happening on the four majors. Starting with the euro against US dollar on the daily. I just want to give you a bigger picture. Let's start with the weekly just to show you where price is trading right now and relative to where it's likely to go to. So bearish engulfing candle the week before, and we've had a lot of movement this week in particular. We've seen price moving to that all-important 350 mark just below the institution, reattempting that major high in the shape of the institution moving average, however, failing to break above it, and now subsequently during the past couple of days trading at the low end of the candle towards that 335 mark, which happens to be a prior consolidation range or support or resistance area here. Very indecisive candle, and that's pretty much what you're seeing now on the daily. You can see this week over here a lot of a nice little bounce going into the start of the week, moving up towards that 3500, testing it, and subsequently giving us this little this swing, this evening star formation at the underside of resistance, and price yesterday moving towards these lows here, coming into contact with this area here of consolidation, and subsequently you can see price yesterday finding a bit of support on prior support at 335. So was able to capitalize on this move. Very aggressive entry and stop and limit, and taking profits when they present themselves against major trends is important, and sure enough you've got to follow or heed those ideas. So now what's it likely to do? Well, we could see potentially further consolidation as we have the G20 summit meeting for the whole of today. So we're going to this consolidated range. This area here between 330 and 335 is very much going to be a no trade zone, primarily because of all the support here, and we're going into a number of things. We've also got the 50 period moving average coming through, which has happened to help support price recently, but we also have the major uptrend. If I just pan out, you can see since July of last year, price has pretty much been making higher highs, and doing so making you can see prices moving higher, which is constituting to a very strong trend. So you've got to draw a trend line in, and sure enough you can see how everything comes together in and around this area. So if anything, depending on how things go on the G20, we could see some speculative moves as the market tries to speculate what's likely to occur on the G20 summit this morning. So we don't like to be trading speculative movements. So it's better to rather stand aside and wait to see if we get any clear direction, and then we'll trade it. So at the moment now, trading into a major support and resistance level in the shape of the 335 going into 333, the 13300 mark. So if you are trading here, be very aggressive. I'd think against it. I wouldn't like you guys to be trading against a lot of uncertainty. If I just go into a 4-hour chart, you can see exactly this what I'm talking about. You can see there's a support here, and there's that 330 mark I mentioned again. But if you only have to pan out to see what happened actually through here from the start of January to where we are now, you can see there's a lot of consolidation here, and this can get into the way of progression further to the downside. So we're going into this bandwidth now, which I call the no trade zone, and I like to make it nice and thick so you guys can see it. So a lot of consolidation, then we saw the breakout. Now we're moving lower and we're going into this consolidative range. The one thing that we've got to be aware of is prior to that, the start of this year, we had price breaking below the institution. And you can see quite clearly on the 4 hour, there was very much more blue than red. Okay, and as long as I maintained above the institution, it was still looking positive long term. However, you can see near term, price has now fallen from these highs here after coming unstuck at the 13,700 mark. And price has been swinging lower, so now the intermediate trend is looking negative, and you can see that that major trend is being targeted. Plus, we're also seeing price now trading at the underside of the institution. So, if this is to progress even lower, you want to see price moving away from that institution as quickly as possible, aggressively. And we want to see a nice bearish engulfing candle to confirm that. So, trading away, getting below, ideally a 4-hour candle trading below the 13,3500 mark would constitute that we should be seeing price moving lower. However, you can see that we are trading within this bandwidth now. So, we're going to see a lot of speculation, a lot of probably a lot of consolidativeness, and with the news out today, that could add to that. So ideally, you want to see price trading below these 2 points here, 1335 and 13300. Get below all the speculativeness, and then you start trading into cleaner air, and that's where you're going to see price really moving with a lot of momentum when we start trading into a lot of cleaner air. So be aware. I mean, if anything, see how the price actually moves today. And that'll give us an idea of what we should be looking for the new week come Monday. So if anything, stand aside. My personal opinion, I'll be looking to stand aside to see where price is likely to go to coming for the new week. On to sterling. Let's have a look at the week. On this one, you can see quite bearish indeed. The price has really fallen away. You can see quite clearly that we have broken through a major support and resistance level recently, and also the institution as well as all the moving averages. Exhaustion at the top here at the 16,300 mark. A lot of indication of that long shooting star here. A lot of indication before that, but a nice major shooting star, and sure enough, we had bearishness to follow. Getting below this prior support recently was very important for price here at 5,900. We got that, but it also broke through the institution. So if you are patient, you're now being rewarded. As it stands at the moment now, price is really moving to the downside. We have a little bit of a near-term support here at 15,500. A little consolidated range. However, that 15,300 is the major monthly and weekly support area. That's the most important one at the moment now, and as long as price continues below the institution, that should be our ultimate target. The 15,300 is a major long-term support, guys. Getting below that, and then we've got a major drop. So everybody will be well adverse on this psychological level here at 15,300. So as price continues below the institution, you should see price moving to the downside. But as I feel as we get to this area here, we're going to start seeing price hesitating, because below this area, and I'll just pan out, you can quite clearly see that major support right since the early parts of or the later parts of 2010. Getting below that, you've got a little area here at 1500, but below that, noticeably a major fall to the downside. So people will be well aware of that. So near term on the daily, you can quite clearly see nice intermediate swing to the downside, all looking rosy. That major support I was talking to you, yeah, just below the 5,900 mark in the shape of the institution, is looking negative, very much negative. The histograms, everything's looking fantastic to the downside. All my moving averages are above price, acting as support, and you can quite clearly see now price has moved into that 15,500 mark prior consolidation, and you can see that we've had a psychological bounce at this area. A lot of selling at the start of this week, and I feel that going into the G20 meetings today, excuse me, you're going to see price consolidating, a lot of speculative moves. So it's far better just to stand aside and wait for a nice clean break below that, and then we can look at that 15,300 long term, or going into next week as a potential target for the foreseeable future. Onto the US dollar Swiss franc. You can see this particular pair has been gaining strength recently, and this week in particular, very indecisive, but still moving upside, still higher than the prior week, and you can see that on the daily. A lot of indecision, and then we've seen price moving higher, nice bullish engulfing candle since then, finding support here near term, just above the 915, and in doing so, we'd like to see this area here, the prior consolidation high, being broken. Yesterday we had a lot of movement, really moving higher, and testing these fib retracement lows, or highs, on the swing retracement. I've taken the current high that we had recently here in early, or mid-January to the low that we currently have. And you can see the 23.6, 38, the 50, 61. Price yesterday testing the 61, but pulling back, still above this, closing above the 50% line. So ideally, we should be looking for price to actually maintain above that level intraday if you're looking for trades to the upside. If we can stay above 920 intraday, and then look to see if we can actually buy on the bounce and head towards that 61.8 level again, which would be in the shape or in line with the intermediate downtrend. You can see quite clearly prices moving lower, trading below the institution, so it's very much negative recently. And if prices continue to the upside, it will take profits if you can at 925, and then very aggressive profits at 930, because 930 happens to be a major support and resistance level. Just looking back on the major scheme, you can see quite clearly here my weekly, lot of consolidation at this 930 mark. So that would clearly be my target if price still keeps wanting to trade to the upside. So near term, very aggressive entries, and take your profits when they present themselves. You can see on my 4 hour now, I'm getting that support now. It needs to maintain above 920. You can see the break above it. So now all I'm looking for is a nice bullish engulfing candle here, which will tell me that price is looking still favorable to the upside. Swing high, swing high, swing high, swing high. So price is really moving to the upside on my 4 hour. So as long as it maintains above 920, look to capitalize very sharply or very aggressively to the upside towards the 925, and ultimately back towards those. There was the major support and resistance level in the shape of the 930 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at this particular pair. I did mention throughout this week that price has been trading above major support and resistance levels in the shape of the monthly and weekly Fib retracement areas, from the major highs that we saw in 2007 to the current lows that we saw through 2011 going to 2012. Prices now moved to the upside going into the new year, and in doing so, breaking major Fib retracement areas in the shape of the 23.8, and subsequently heading higher into that 38.2. Price has this week unfortunately stopped at the 38.2, which is a nice round number at 94, and you can see we're starting to see a lot of consolidation at this level. If I just go to my daily, you can quite clearly see this hesitation now. End of last week going into the new week. This week, you can see that on Friday we had a nice bull bounce to the upside. However, it's been capped, and Monday, Tuesday, Wednesday, Thursday, Friday, we're sitting now moving lower. It's imperative if this is to be still remain positive long term, we do need to get above 9,400 as soon as possible. Failure to do so would see price consolidating, and you can see quite clearly near term price is now testing price support and resistance levels here in the shape of just above the 92.50 mark. So intraday, we'd like to make a note of that. So there we go, 92.50 has been drawn in the sand, horizontal line here. I'll just make it so you can see quite clearly price support here. You can see the hesitation going into this level. Prices are falling to the downside, and as long as it maintains below 9,400, we should look for pullbacks or consolidation. So break below this area here, this consolidation area here, would indicate that we should be looking downside towards the next prior consolidation area here between the 91 and 90.50 mark. So wait for a nice break below that. Ideally a nice bearish engulfing 4 hour candle will be fantastic, because that will tell us that the sentiment is genuinely there, and then we'll look to go short near term. And because it's in a positive uptrend, you can quickly see the institution is below price, supporting her. It is safe to say that we should then start using, now you can see quite clearly how the major trend line has been broken recently. Take out this fake out here. You can see the more touches, the stronger the trend. It's safe to say that if the institution is below price, that will be her support, her magnet. So if she breaks here near term at this area here at 92.50, she's likely to go towards the 90.50 or 9100 mark, because that's where the institution is. So we could capitalize on that really aggressively to the downside on our intraday trading. So on our hourly, let's wait for a nice juicy bearish engulfing candle, and then look to capitalize to the downside near term towards those areas at 90.50 or 91. You can quite clearly see that consolidative range here at that between these two areas here. Okay, so that's it for today, guys. I hope you have a fantastic trading day. Not much else in terms of news, but we do have those all important G20 meetings happening in Moscow. I think the topic of the day would be the Japanese markets, financial markets, and the yen, and the depreciation apparently of the yen and how drastic it has been recently. And people are speculating if it was depreciated on purpose, and that's going to be the talking point. So look into that, see how that all factors into what happens today on the currency markets. Otherwise, have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.